Investing in the stock market is a great way to earn money and grow your capital, but this all depends on your strategy, your risk tolerance, and the time horizon. In previous videos, I talked about dividend investing and growth investing, but which strategy is more profitable? In this video today, that's what I'll be diving into. Stay tuned. So welcome back to the channel. I am Lance and here we discuss financial related topics. And please subscribe and like this video and share if you haven't done so already. So the two most basic ways an investor can gain from stocks are dividend payouts and capital appreciation. Any company can have a mixture of both, but some companies are known more for a consistent dividend policy. These tend to be more mature companies, while other companies pay little to no dividend but experience much higher growth in business and stock. On one hand, we have growth investing, on the other hand, we have dividend investing. Now, growth investing is a style of investing which focuses on capital appreciation, and this is an increase in the price. These are companies that normally exhibit signs of high growth, whether in revenue or in earnings, and these stocks tend to outperform their industry peers or the market overall. Dividend investing, on the other hand, now is a style of investing which focuses on buying high dividend yield stocks or companies that pay regular dividend, or it can just be that this company pay a high amount of dividends. So dividends really is just payments made to shareholders to say thank you for owning this stock and to make shareholders feel happy. Now, imagine that you buy this company A, that pays you a dividend of $5 and one share price is $100. This is the dividend yield, and in this case, this is a 5% dividend yield. But to make a practical comparison, I'll be looking at the actual returns from dividend and the actual returns from capital appreciation. In making these comparisons, I'll be using two methodologies. Number one, companies that experience super growth both in business and in stock versus dividend kings. These are companies that pay consistent dividends and increasing amounts up to over 50 years. And number two, I'll be using companies that are well known and popular worldwide, so everyone can relate to these companies somehow. Now that we know what dividend investing and growth investing is, comment dividend investing if you prefer dividends and comment growth if you prefer capital appreciation. The two first comparisons today is Apple versus Coca-Cola. And the reason for these comparisons is because Apple is a super growth stock while Coca-Cola is a dividend king. And not only that, these companies are popular worldwide. You can find any of these companies in almost any country in the world you travel. So these are perfect comparisons. Unless you have been living under a rock, you would have known a product or two from Apple. And Apple is the world's most valuable company with a market capitalization of $2.8 trillion. And Apple is a company that specializes in consumer electronics, computer software, and online services. In the last 5 years, Apple stock has increased from about $30 to $166 at the time of recording this video, which is a compound annual growth rate of 34.3%. This is a great appreciation in the past, whether or not the stock is able to replicate such performance in the future. Apple only started to pay dividend in 2012 and has paid a dividend of $3.97 from that time since. So if you would have bought Apple stock at the beginning of the period of comparison, which is a 5-year period in this case, you would have had a 10.4% return in dividends plus a 336% return based on the current stock price of 166, which would be bringing a whopping return of 347%. Now, the Coca-Cola company, trading under the ticker symbol KO, is a total beverage company with products sold in more than 200 countries and territories. Coca-Cola owns 27 brands of beverage in various segments other than its all-time classic Coca-Cola. Over the last 5 years, Coca-Cola has paid a dividend of $7.39. So if you had invested in Coca-Cola at the beginning of the 5-year period at a price of $41, you would have received 18% return in dividend plus a 33% at current share price of around $62. So this would bring you a total returns of 52%. Cumulatively, this could be seen as 10% per year. I'm going to take a look at some companies on a 10-year time frame. First, I'm going to use 2 growth companies that has never yet paid any form of dividend. And number 1 is Amazon. And Amazon is an e-commerce company that also does artificial intelligence, cloud computing, and digital streaming. Amazon has never yet paid any dividend, and from 2012 to 2022, Amazon price has appreciated by 1,549%. That's going from $185 to $3,034 at the time of this video. And number 2, I have Netflix. Netflix is an American subscription streaming service and production company. Netflix was launched in 1997 and offers a library of films and television series through distribution deals. Also, the company does its own production. And the price has appreciated by 2,300%, which is a price of going from $16 to $384. On the other hand, I want to mention 2 more dividend kings. And the dividend kings are 3M and Johnson & Johnson. Now 3M is a manufacturing company that produces consumer goods, health safety products, and healthcare products. Now 3M have experienced a capital appreciation of 65% from $87 to $147 and dividends of $46.05. And this is a total return of 117%. And the second company is Johnson & Johnson, which is a multinational corporation that was founded in 1886, which produce pharmaceutical products and consumer packaged goods. Johnson & Johnson has experienced a return of 159% in capital appreciation and 55% in dividend return, which is a total of 214%. Depending on the investor you are, you might find growth or dividend investing attractive. But personally, I prefer growth companies and I don't look at dividends when I'm investing. Because at the end of the day, dividends are discretionary payouts by a company board of directors, and these dividends can be used to further grow the company or put into research or sales. I look at the overall potential as a company, the potential growth, because this growth will show in the long term. So that's my thought on dividend versus growth. Please like and subscribe and share this video.